It was a tough day. I'm talking about a really tough day. I mean, the averages, they were annihilated, all right? Dow plummeting 560 points. S&P plunging 2.45%. And the NASDAQ, sell. Nosediving 3.52%. All for one reason only. Interest rates are soaring.
With the recent fear of rising interest rates, growth and technology stocks are under growing pressure as investors flee for other options. A rise in the U.S. 10-year Treasury rate and increasing inflation of the U.S. dollar, as many believing the Federal Reserve will raise interest rates. A cyclical rotation into value-oriented stocks has already begun. The likes of Palantir, ARK, Square, Apple are in some cases down over 25%. And Tesla itself has lost over 34% from recent highs. To further exacerbate the issue, a global chip shortage is affecting production across multiple industries. Ford and General Motors has stated that the chip shortage could lower combined earnings by around $2.5 to $4.5 billion in 2021. Despite a recent bounce, many investors are selling out of their positions in belief that further pain is to come. So what should we as investors do? Is it time to sell out, or should we be buying the dip? In my opinion, the fears of rising interest rates and lagging chip production have presented a glorious opportunity to purchase Tesla stock for the long term. Here are 3 reasons why I'm loading up on Tesla stock, and stick around at the end of the video for my year-end price target. In 2020, a year marked by tumultuous events, Tesla was able to deliver 500,000 vehicles, selling the likes of the Model S, X, 3, and Y for a staggering year-on-year increase of nearly 40% in total vehicles sold. And the company has yet to begin production of some of their most promising products, the revamped Tesla Roadster, Cybertruck, and the Tesla Semi. Elon Musk has stated that he expects Tesla to maintain this compounding annual growth rate for the foreseeable future. One can see the massive exponential growth that this would entail. By 2030, Tesla would be in line to produce 20 million vehicles per year and would be bringing in nearly $2 trillion in revenue on the auto business alone. Due to unprecedented demand, Tesla currently has one limiting factor in the production and sale of their automotive and energy products. For any EV company, production is entirely dependent on the acquisition or production of battery cells. Traditional battery manufacturers are already producing at full capacity to try and meet global demand. This increasing shortage will make it increasingly difficult for any EV company incapable of producing their own batteries to survive. However, Elon Musk and company have already started to take things into their own hands and have already completed the production of both a new battery cell and battery cell production facility. This facility will be capable of producing a massive 10 gigawatt hours worth of Tesla's newly designed battery, enabling the production of some of Tesla's more battery-hungry products.
Look how much it's come down for Tesla. This is according to Cairn Energy Research Advisors. They basically break down batteries, look at the battery pack, look at the battery management system, and they say that Tesla is now down to $156 per kilowatt hour. That's at least $45 to $50 above all other automakers who do not use the same type of battery pack. They do not use cylindrical battery cells for building theirs. And according to Sam Jaffe with Cairn Energy Research, this is an advantage that Tesla is using and will use for years to come.
In time, Tesla may grow to rival even dedicated battery manufacturers, and this will allow them to undercut the price of all competitors. Most traditional car manufacturers will be unable to compete, and their days are numbered. Batteries will enable billions in revenue through the sale of auto and energy storage products.
The fact that we continually hear from people saying, well, there's nothing different about a Tesla than any other electric vehicle. That is simply not true. When you talk with, whether it's Cairn Energy Research or you talk with others, they will tell you that, yes, there is a difference both in terms of structure, the software, the chemistry. That is a difference that Tesla is using right now, and it's a big reason why increasingly when you talk with analysts on Wall Street, they say this is an advantage that Tesla will use at least for the next couple of years until other automakers become more competitive with them on the cost side.
It should come as no surprise that Tesla's full self-driving software is at the forefront of AI technology. Every Tesla sold for the past 3 years has come equipped with hardware necessary for FSD and with the ability to capture real-world driving scenarios. With billions of miles of real-world data uploaded through each Tesla on the road, Tesla has a massive lead on all other competitors. But why does this matter? The billions of miles of data that Tesla is collecting is being used to train Tesla's FSD driving model, and in time will be fed into a machine learning supercomputer known as Dojo. Dojo will ingest this data and perform immense iterations of real-world scenarios to train Tesla's self-driving model. The advantage of Dojo should amount to a huge increase in training speed, making the arrival of Level 5 self-driving technology inevitable. In theory, Tesla will be able to market out Dojo as a service to other companies looking to train their own industry-specific neural nets. Elon Musk has tweeted that he plans for Dojo to perform at over 1 exaflop, and at that speed, it would rival the processing power of any supercomputer in the world. Both Dojo and FSD could open multiple multi-billion-dollar revenue sources for Tesla.
And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real-world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous, we believe, is going up, and therefore our price target will probably follow at some point.
So, how much money is there to be made, and what is my price target? Tesla's growth as both an automotive and technology company is undeniable. And of course, Tesla is already expanding multiple other potential sources of billions in revenue, including solar, energy storage and arbitrage, insurance, and others. Tesla is attracting some of the brightest talent around the world and pushing the frontier of automotive engineering. Furthermore, Tesla is helping to usher in a new wave of advancement in renewable resources, helping drive the move towards a more sustainable, greener world, less reliant on traditional forms of energy. The days of vehicles being powered by decomposed organic matter are coming to a close. All this to say that the company has potential for massive growth in the future, and the recent fall in price presents an opportunity for investors to build a position in the company. I believe the company can exceed $1 trillion market cap by end of year. My personal price target is $1,100, presenting an 83% potential return by year end. Even more impressive is the potential for long-term growth. Tesla has been on a relentless march and has showed no signs of slowing down. I plan to buy and hold this stock for the long term. What do you think is Tesla's biggest future revenue source? Have you or are you planning on purchasing Tesla stock during this most recent dip? If so, what price? Leave a message in the comments. If you liked the video, please leave a like. If you didn't, a dislike. And if you're interested in future content, be sure to subscribe. We'll be looking at future opportunities in the stock, crypto, and real estate markets on our journey to financial independence. Peace.